Welcome back. Now for the AFEX Commodities update. AFEX commodity trading indicators were all in the green in the week that ended June 21st. The total value traded was up 2.69%, while the number of contracts traded went up 83.10%. For more now, let's bring in Michael Martin, Portfolio Manager at AFEX. Hello, Michael. Great to have you.
Hi, Ladi. Good morning.
Good morning.
Thank you for having me once again. It's always a pleasure to be here.
So give us a summary of what transpired in the week ended Monday, June 21st.
Thank you very much, Ladi. So if you look at the table in front of you, and it essentially gives a summary of the total value of transactions traded on the exchange, you would see that the total value of transactions went up by a factor, not percentage now, Ladi, went up by a factor of 2.69. From around 298 million naira to close the trading week at 1.1 billion naira. The total number of contracts traded on the exchange also went up by 83.10% from around 15,173 contracts to close the trading week at 27,781 contracts. The total number of deals that happened on the exchange also went up by a factor of 4.4 from around 10 deals to close the trading week at 54 deals. The AFEX Commodities Index also went up by a factor of 16.98% from 393.23 points to close the trading week at 460 points. The AFEX Export Index also went up by 12.67% from around 150.08 points to 169.09 points. With regards to the volume of transactions, volume of contracts traded on the exchange, there was generally higher volume traded across board, with the only commodity trading lower this week being maize, which traded from around 13,220 contracts last week to close to this trading week at 1,833 contracts. With regards to price on the exchange, like you said earlier, Ladi, we essentially saw grain across board. So the price of maize went up by 22.07%, gaining more than 4,000 naira in the contract value to close the trading week at 23,431 naira per contract. Soybean went up by 6.38%, gaining more than 2,000 naira in the contract value to close the trading week at 33,615 naira per contract. Paddy rice went up by 9.12%, gaining 1,884 naira in the contract value to close the trading week at 22,534 naira per contract. Sorghum went up by 32.97%, gaining 5,770 naira in the contract value to close the trading week at 23,270 naira per contract. Cocoa went up by 1.35%, gaining just over 1,236 naira in contract value to close the trading week at 92,736 naira per contract. Then we have ginger, which also went up during the week, gaining 22.91%, gaining 20,125 naira in the contract value to close the trading week at 107.98, 107,987 naira per contract. Sesame also went up by 4.76%, gaining 902 naira in the contract value to close the trading week at 50,406 naira per contract. And last but certainly not least, we have cashew nut, which went up by 3.80%, gaining 3,539 in the contract value to close the trading week at 44,684 naira per contract. And last but not least, we have the fair trade exchange traded commodity, which essentially remained unchanged in the week under consideration, remaining at 14,220 naira per contract. And as we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And if you want to get involved trading commodities, whether or not that's spot contracts or fixed income notes or product, you can always download our app, which is available on Google and iOS.
Quite a bullish week, Michael, I must say. But then, can you explain the reason behind the price hike in commodities seen on the exchange?
Thank you very much, Chimezie. So to answer that question, one thing essentially comes to mind, and that is liquidity. So at every single point in time, the prices that we report on this commodities market update, we essentially want to make sure that they are as truly representative of what is going on in the commodities market as possible. But that is usually the case when you have the same levels of liquidity that you have on the exchange in comparison to the same levels of liquidity that you have on the open market. But therein lies a problem whereby you don't have as much liquidity on the exchange. And what that means is that you don't have as much volume of transactions happening on the exchange vis-a-vis what you have happening in the open market. So what tends to happen is that there tends to begin a slight divergence in the prices that you have on the exchange from the prices that you have in the open market. So what we have tried to do, by virtue of the fact that we're not having that much liquidity on the exchange in comparison to the open market, is to give a greater weighting to the types of transactions that are happening in the open market and the prices that are currently available or obtainable in the open market. Give more weighting to that in comparison to the prices that we have on the exchange. So the weighting that we have with this new methodology is a ratio of about 70 to 30%, with more going to the open market. And it's essentially so that the prices that we report at the end of the day are as truly representative of the prices that you have in the open market.
All right. Talk to us about your input financing program. You know, how well the wet season input disbursement has been going since it started this season.
Thank you very much. So the input financing program has been going, disbursement program rather, has been going significantly well. We have seen a bit of progress since we started. So we started the input disbursement program in the last week of May. Until date, we've reached approximately 18,000, more than 18,000 farmers. If you do a simple approximation of 1,000 farmers, I mean 1 farmer to an hectare, that's essentially 18,000 hectares that we've already covered. It's also the case that the averages that we're doing with our field extension officers in the market nowadays sort of range between 600 to 800 farmers every single day. But the input disbursement program has not been without its challenges. So the first of which would be the delayed rainfall So we usually expect rain to have started in the month of April. We didn't see that rainfall start until the month of until the latter part of the month of May. And what that essentially means is that you can't give inputs to farmers if rains haven't essentially started. So that has sort of limited the number of farmers that we've been able to reach out to the number that I reported, which is about 18,000. Had the rain started earlier, we would have had higher numbers, pushing 30,000, 40,000. But our field extension officers, they are doing a lot of hard work. There's a lot of hard work involved in the entire process. And we are optimistic that the numbers are going to improve significantly in the coming weeks.
So who is eligible for this input from AFEX, and what is the process?
So essentially any smallholder farmer within the operational regions, and that would essentially be within the northeast and northwest and northeastern part of the country. And our process essentially stands on 3 pillars. The first of which would be data, the second of which would be profiling, and then the last of which, maybe not least importantly, would be financial inclusion. The process essentially starts when we instantiated an interaction with the smallholder farmer, and then we essentially register them by gathering as much data about that smallholder farmer as possible, and this involves their name, their location, their farmland, and a couple of other data points. From there, we then profile the farmer to see what essentially his input disbursement needs would be over the course of an entire commodity season before we then eventually disburse inputs to him. Before the disbursement does happen, I must say that the farmers are sort of organized into cooperatives for better accountability and administration. And then this entire process is, we leverage technology throughout the entire process. So from the process of the farmer data gathering to the farmer profiling, and also to the last input disbursement, and of course the eventual repayment of the inputs, we essentially leverage the proprietary technology that we use at the firm, which is of course our Workbench platform. So this gives us an end-to-end visibility of the entire process from start to finish.
All right, but what has been the reach and impact so far?
So the reach essentially has been, for example, this year alone, we've already done approximately 18,000 farmers. The goal is to get to as high as 150,000 farmers. But the impact cannot really be measured until, of course, the farmers harvest the crops that they've cultivated, and then, they repay back the loans that has been disbursed to them. Over the past couple of years, we've been able to reach out to more than 100,000 farmers. So what I can't tell you that has been the impact, as we have reported at several times during the course of this show, has been that with farmers that have been under the AFEX network for a significant period of time, they essentially experience very little to no hunger, and they're essentially food secure. And so what we have also seen is increased productivity due to the quality of inputs that we give to them on a year-on-year basis, and by extension also an increase in their livelihood and income. So what that essentially also does is that it increases their purchasing power, essentially raising them out out of poverty. So that has been the impact in the past couple of years. And we also expect the same to continue with this year's input disbursement program, seeing that we're also looking to reach out to a higher number of farmers.
Now, there are definitely plans on repayment. What is AFEX putting in place to ensure this is going efficiently?
Thank you very much for that question. And that's a very important question to answer, because the loans are only as important as how well they are repaid at the end of the day. And I have alluded to how historically we have seen a 98% repayment rate for all the loans that we have disbursed to smallholder farmers. There is a reason why that is the case, and that's because of some of the structures that we have put into place to ensure that that repayment does happen. The first of which would be we have warehouses situated at localized places that are close to these smallholder farmers, which essentially helps us facilitate a last mile interaction with the smallholder farmers. What this essentially means is that it's easier for them to repay the loans, knowing fully well that they won't have to travel far in order to repay the loans that has already been disbursed to them. The second of which would also be, remember I mentioned that the farmers are usually organized into cooperatives, and what this essentially means is that it's easier for our field extension officers to monitor whatever is going on with the smallholder farmers, and it's also from an accountability standpoint, because a farmer is less likely to default on a loan if he's working within a cooperative, as opposed to if he's working with if we're working with just one single smallholder farmer per time. Another infrastructure that we've also put into place, or structure that we've also put into place, is we have field extension officers having monthly meetings with the smallholder farmers that we disburse loans to sort of get an overview of how the cultivation is being, how it is going, and what exactly it is that we can do to help them improve pending when they eventually harvest. And then lastly, at harvest, when they eventually bring these products to the exchange for transaction, we essentially offer them competitive prices, meaning that if the price of maize at harvest is around 150,000 in the open market, what you would essentially also be seeing on the exchange in transaction with smallholder farmers is also around the same 150,000, meaning that farmers essentially get competitive prices for whatever volume of commodity that they bring to the warehouse in repayment of the loans that has been disbursed to them.
Well, Michael, just before we let you go, now, if someone like Laddie and I would want to, I mean, we've seen that bullish trend in the market this week, and hopefully it's going to continue in the new week. If Laddie and I, even though we are not farmers, we want to invest in this commodities market, how do we go about that?
Look, Laddie and Chimeze, I've been talking about this for the better part of Laddie said last week that you bought ginger, but me and you know that ginger.
Don't mind it.
Just a handful of ginger, really.
But look, it's better late, but it's better late than never. But to truly answer your question, there is an easy way for you to engage in the commodities market. We've more than made that easier for you by the fact that you have the technology, you have the app on your phone. You can essentially create a profile, log in, and then buy commodity. It's essentially as simple as you buying credit on your phone.
So I don't have to be.
So what you then do is when you log into the platform,
be a farmer. I don't have to be a farmer to, play in this market.
Trust me, we don't discriminate. Anybody can buy. We don't discriminate here. We don't discriminate. Anybody can buy commodities. Just download the app, figure out what commodity that you want to buy, maybe by virtue of the research that you've done, depending on the seasonality that is currently in play. And then you just buy that commodity and then wait and hope in appreciation of the value of the commodity that you've bought. But we don't discriminate, like I said. Anybody can buy. Laddie, go and buy. Thank you.
And hopefully that will help hedge against inflation.
I like the way ginger looked this morning.
Yes, you will.
Okay, maybe you are hoping to, put your money in there.
Yeah.
Okay. Anyway, thank you very much, Michael, for sharing your time with us today.
Thank you.
You're welcome, Chimeze.
We'll take a moment. We'll be back.